Welcome back. You're still watching Business Morning live from Channels HQ. On to our next conversation now. Oil prices fell for a second consecutive day today as the US dollar soared on the prospect of interest rate hikes in the United States, but were nevertheless on the track to finish the week flat, only slightly off the multi-year highs. Brent crude futures were down 52 cents at $72.56 a barrel, extending a 1.8% decline. And U.S. West Texas Intermediate crude futures was down 48 cents at $70.56 a barrel after retreating 1.5% on Thursday. The dollar has rocketed in the two sessions since the U.S. Federal Reserve projected possible rate hikes in 2023. Earlier than market watchers previously expected, a rising dollar makes oil more expensive in other currencies, curbing demand. The prospect of rate hikes also weighed on the longer-term growth outlook, which would eventually hurt oil demand, in contrast to the near-term outlook for growth in demand as COVID-19-related curbs on movement and business activity ease and road and air travel actually pick up. How does this affect Nigeria, and how is this the oil and gas scene in Nigeria? Mustafa Wahab, analyst with Chapel Hill Denham, joins us now to discuss this. Good to have you, Mr. Wahab.
Thank you very much.
Good morning.
Happy to be with you.
Good morning. Thank you for joining us. Well, oil prices are down for 2 days. They've been down for 2 days now, and the hike in price is supposed to be for Nigeria's good. But should we be worried right now?
I think not necessarily in the short term for oil price. Number one is that most of the economies of the world right now, they are still significantly restricted. A lot of people still have, a lot of restriction in place because of COVID. And yet, as we speak, crude oil supply is far below, what we're seeing for demand. So we're currently in a deficit position. And the impact of this is possibly going to continue to support oil price at this, significantly elevated level at between 70, to $75 per barrel level. I think the declines that we saw in the last 2 days, is just basically stemming from, the news around, the US now starting to gradually reduce some of the sanctions that is imposed on Iran. The prospect of the fact that Iran coming back to the market would most likely put a lot of pressure as far as, supply is concerned. And obviously the impact of that is going to be negative on oil price. Hence the reason why we're seeing that sort of very sentiment. But between now and the next and the medium term, I still think that oil price would remain largely elevated, because of the fact that, demand is still, quite strong, despite the fact that a significant portion of the economies of the world are still largely, restricted.
Well, with this elevation in oil prices also comes elevation in subsidy in Nigeria. In fact, FJ has said that its subsidy is not sustainable. And someone projected that by the time the oil price gets to about 75, Nigeria will pay about 1 trillion naira for oil subsidy. Now, we have had this subsidy conversation, for a while now. From your perspective, what is the way out?
We all saw President Buhari's conversation the last time he came to Lagos. And, one of the key areas that he touched was around subsidy. And from the body language of the president, what I think generally is that subsidy in Nigeria is probably not going to go, at least in the next couple of months. And that's basically because of the fact that, the president, seemed a lot more convinced that, it's in the interest of Nigerians, to continue to pay subsidy. And which is quite surprising because we all understand that Nigeria cannot really afford subsidy. But the honest truth is that for me in the short term, I think whilst we're waiting for whether or not subsidy would go in this sort of regime that we're in right now, I think some of the low hanging fruit was touched by the president, which I completely agree with. Right, if you beef up security in the border of the Nigerians of Nigeria with Nigeria and neighboring countries, we might start to see some sort of gradual deceleration in subsidy payments in Nigeria. And the reason is not far-fetched really. In-house in Chapel Hill, we estimated that Nigeria consumed. We understand that Nigeria consumed at least 17 billion liters of payment product per annum. Right, in-house in Chapel Hill, our estimate is that at least between 30 and 35% of that is essentially being smuggled out of the federation. And that's basically because of the fact that if you go to Niger, for instance, our PMS selling price is at least 3.5 times more expensive compared to what we see in Nigeria. You go to Cameroon, almost the same thing. In Cameroon, I think PMS price is about 4.5 times a lot more expensive when compared to what we have in Nigeria. So it just basically makes sense for anybody who sees the opportunity, to buy Nigeria's PMS product at cheaper price and sell it to other neighboring countries. So if Nigeria is able to keep up security in the border, then it makes sense for us to some sort of gradual deceleration in subsidy payment.
So are you saying that if the issue of this leakage, the smuggled part, is dealt with, then Nigeria can still comfortably or somewhat continue with a subsidy in the meantime? Is that your opinion?
No. So it's still expensive. I mean, it's still quite expensive. At some point, we would have to let subsidy go. But the truth is that if we can plug some loopholes right now, we can see subsidy reducing by at least 30 to 35%, right? I mean, we still leave 70% huge amount of subsidy to be paid by Nigerian government on an annual basis. So, I mean, overall, we still can't afford it. But for a low hanging fruit, something that we can solve, like recently, in the medium term, I still feel like beefing up security in the border would solve it's the problem at least to a very tiny level.
All right, looking at this oil market right now, when do you think, what price should I be going short?
On oil price?
I'm looking to short it.
I mean, I would call shorting oil price to you. Why I would just say clearly is that our view seen out in Chapel is that oil price is going to average $65 per barrel in 2021. And our views is basically driven by the fact that we still think that OPEC, having done significant amount of job to keep, oil price, at these current levels for a long period of time, we still think that the impact of OPEC, I mean, the influence of OPEC in the market is still quite strong. So irrespective of what we're seeing as far as demand is concerned, what we think is that OPEC will continue to gradually adjust, production, to ensure that, oil price remain at a significant level, which it can support, budget implementation of all of its, member, including, OPEC plus member. So in-house, we're thinking $60 to $65 per barrel average over 2021. So, I mean, you can then decide on when
to short. All right, let's look at the PIB now. The lawmakers have promised that the PIB would be passed this month. What role should we expect the bill to play in this scenario?
I think we've said it many times, right, in terms of role. So the way you can think about PIB is an ease of doing business policy in the oil and gas space, right? One thing that I think it should be understood by many is that Nigeria oil and gas industry, does not really exist in isolation. It basically exists in an environment where investments are moving towards climes where regulations and investment opportunities are clear, right? So what we think is that PIB will just basically provide us sort of regulatory clarity, both in the upstream and the downstream segment of the industry, and then could materially drive some sort of renewed investment interest in Nigeria. I think in over the last 5 years, we estimated that around 17 billion actually flowed into Africa in completed FIDs in the oil and gas space, right? And only 3 billion of that actually came to Nigeria. So passage of PIB would probably be the potential key game changer as far as the upstream oil and gas sector is concerned. For the downstream, I mean, that regulation has been squeezing the industry significantly as far as downstream is concerned. So we think that if PIB is passed, that would just basically give the industry a lot more free will to operate. They are able to charge their own prices, they're able to determine what their own cost is, and the impact of this will essentially drive significant expansion as far as margin is concerned. So that's what I think the role of the PIB would play, and it becomes imperative to just basically quickly pass the bill.
So while we await the passage of the PIB, what should investors be doing? Should they just ignore the downstream and oil and gas sector?
To answer this question, I think it just basically makes sense to put things in proper context, to understand where we're coming from, where we are right now, and where we're going. So what we did in-house in Tapoyo recently is that we check, share price movement of the major downstream players in the last 5 years. And what we saw was that between 2018 and 2019, where price regulation in the industry was significant. We saw material deceleration in share prices across Total, Ardova, and Tana, right? So by March 2020, when FGM basically announced that they are most likely going to be removing fuel subsidy completely, we started to see some sort of renewed interest in the market. But since then, nothing material has actually changed in the industry. And so, to be honest, I mean, over the last 5 years, what we've seen is that the industry has been squeezed as far as margin is concerned. And this is not to say that downstream business across the globe is a strong margin generating business. No, I just feel like it's a lot more worse in Nigeria because we checked Total Kenya, we saw that net margin in Total Kenya is roughly 5%. Total Ghana is doing around 4.7%. Engine in Botswana is also doing around 4%. As far as net margin is concerned, the best company in Nigeria is Etana, doing around 1.6%. So what we're saying is that regulation has actually squeezed margins significantly. So if that's the case, what investors then need to focus on would now be, those businesses that have, nice product diversification. For instance, we understand that in the last 5 years, margin that you get from selling loops products is at least 15 times more expensive, more attractive compared to what you get for selling white products. So what we're saying is that investors should look at those companies who have nice, stronger portfolio of loops, compared to just pure white product alone. For instance, Total and Ardova, Total alone actually enjoy, at least 50% of the market share in loops business. Ardova also is enjoying around 19% of the market share of loops business. So if investors could focus on this business, whose portfolio is a lot stronger in the loops business segment of the industry, then we'll probably see some sort of nice share price appreciation from that perspective.
All right. All right, we'll have to leave it there now. Thank you so much for your time on the program. Mustafa Wahab is analyst research at Chapel Hill Denham. Thank you so much for your time on the program.